Whenever you get in a unidirectional trending market, the best thing to do is just pop your PIMAs up and look for these opportunities in here, right? Those are the ones. You don't want to get caught selling, because right now the counter trend rotations are very modest, and those counter trend rotations are just being bought up. And a lot of times during a market like this, especially yesterday after we got out of the room, the intensity of the trend increased. You can see it right here. It really increased. You can see that when we were in the room, it was very modest. Once it got beyond the previous high here, it got much more intense. And one thing I always notice is look at the uniformity of the moves, uniformity of the pullbacks. Like this little pullback from here to here was X amount of points. And you look at it here to here, it's about the same. Then here to here, it's about the same. You know, that's kind of a program signature there. That when it pulls back X amount of ticks, 5 ticks, you know, programs are designed to buy, say, 800 contracts every 5-tick rotation downward. Buy 800, it rotates. Buy another 800, rotates. Buy another 800. You know, so they're programmed to buy and you know, at certain intervals, and that's how you get left behind that program signature. And so this thing has been trending up. And anytime you get into those minimal counter trend rotations, that's, you know, immediately you can't be looking to fade. So I always say that there's optimal bidding strategies for all the different markets. When we're sideways, you know, we're looking for rejections at the edges. But when we start to get trending, you can't really be part of the fade crowd. You got to be part of the crowd that's influencing that price behavior to the upside, which means you want to be buying those dips in the direction of this trend up, and bringing out the PIMAs and looking for that trigger zone is the best way to go. So the trigger zone, as we talked about last week in our signature setup series, trigger zone is between the fast and medium moving averages. When they get fanned out and stacked and sloped in this manner, you look to defend that area, look to defend, and push to a new high. And right now, that remains intact until proven otherwise. And so at the moment, it's still trending. The 125% extended target is going to be 22.92, and then we have 93 now as R3, so that's an easy target up here that this thing could reach. And then earlier on a swing perspective, in the pre-market chart, I talked about 96s being very important, and then of course you have the round number at 23. Here's a 100% expansion target also. That's about 302. It's hard to get up here and buy. It's hard to buy at these with these minimal rotations. But again, if this thing can drop into the zone, it's another opportunity up. So 87 right now to 87.5 would be a fantastic zone. Because again, once you get into a unidirectional trending market, we look to the profile. And the profile shows an I-shaped, for the most part, an I-shaped profile, elongated price discovery shaped profile. And whenever you get that profile, you leave behind LVNs in the chart. And each of these LVNs are where bulls are designed to defend their trades. So when price pushes through that LVN and comes back, they're going to defend it, right? Price pushes through that LVN, they're going to defend it. And pushes up through this LVN, they're going to defend it. Form a little value, and then they push up through this LVN. So when it returns, they're more likely to defend it. So right now, 87 quarter is a great spot to look for a potential buy. And then again, your goal is always just a new high. And the new high would take you beyond 90, so say 91. So 87 to 91 is only a 4-point trade. It's not a whole lot. But that's what we have right now. And sometimes, if this thing's going to continue onward, you can bite the bullet and just hold on throughout the day. And sometimes that works, and sometimes it doesn't. Lately, it hasn't really worked a lot because we haven't been in trending markets. But the last 2 days are clearly a trending move. And so buying early and just kind of holding on can be good, especially holding on for the first couple of hours of the day, heading into lunchtime trading. But right now, 87 is going to be the next zone to watch for bulls to defend, and that could give you 93s. Highest high, or a new high, would be about 91, but 93 would be good. That'd be about a 6 5 to 6 handle move, that's not too bad. Here's 87s, 87 quarter still might be tested here in the ES. That's still a good spot for here. Yeah, so right now we are getting the initial bounce. Yeah, that 87 quarter is in, but again, you know, this market has very tight rotations right now. Ideally, it's squeezing up. You know, when you have these tight rotations where you get a lot of back and fill, if the market goes up 6 or 8 ticks, you got to be able to take some off and just protect yourself, because there's a lot of back and fill. And when there's, you know, what I mean by that is, look at this bounce right here, boom, and then it comes right back. Then it bounces and it comes right back. And it bounces and it comes right back. It bounces and it comes right back. That can give you headaches and heart attacks. So if you get your spot and you get the bounce, you got to be able to take some off the table. In a market that's continually back and filling, it's safe. Six or 8 ticks. Go ahead and take some off the table, and then from there, let the rest go to those targets. And again, 93. What is that? A 9? 93 is the next zone up between 92 and 93. But the goal is always, in a trending market, you're looking for a new high. You're looking for a new high. And right here, this is a trending market. That's the high. If you're going to bounce here, then ideally you just got to take out that high. And that's 91s. So right now, not bad. It's pushing higher off that zone. Again, stacked and sloped, right? Stacked and sloped tells you that this right here is stacked and sloped higher. It's trending up, but we've seen lots of rotations back and again in here before it hits that high. So I don't want you guys getting caught into or gals getting caught into a pullback here right away, and it just does this and then goes. So you got to be able to take a little bit, no matter what it might be, so that when it does rotate, because it will, there'll be some shakeout leg, and when it happens, you can do it with more peace of mind if you had scaled. So right now, this is still a strong level, and even if it were to be tested again, I would expect bulls to still defend it yet again, because that's the game in this auction. The game is to defend that LVN in a trending market. That's the rejection. And you leave behind a series of LVNs in a trending market. And every one becomes an area to defend for these bulls. So as soon as it creates that LVN by hitting it, then it pushes through it, that's going to be a focus point for those bulls to come back in and defend. So again, 87 quarter was nice. And that also shows you one thing, which is, you don't have to chase price. Over here, it came into the zone, the trigger zone, and it looked like it might leave you behind. There's a ton of traders that would be like, oh no, I'm going to get left behind, so I'm going to get in here. When you knew that 87 quarter was the level, right? I'm guilty of that so many times where I'm like, hey, 87 quarter is my level, so I put my limit there. Price comes into the trigger zone and starts to bounce, and I'm like, oh man, I didn't get filled. So then you try to get in somewhere up here, and that wasn't the zone, and then it rotates until it gets to 87 quarter, right? So there's a lot of lessons here, but I always say you have to allow the market to force you to trade at your levels. There's too many opportunities in the market to chase price and get a bad entry and a bad fill or a bad trade location. This game is all about being patient and waiting for the optimal entry zones. And if you don't get that optimal zone, then hey, there's always another opportunity. There's always another train coming. That's what the pros always say. There's always another train coming. If you missed it, that's fine. There's always another train coming. But, not bad. Right on the money. And it's holding up here. So right now it's about 7 ticks off the zone. That's good. The idea is that it'll get up here, though. We're gunning for this 92 quarter and this 93, this R3 up here. 93 quarter now. That's if you want to hold this thing and up to here. Obviously, the goal is always just a new high. So if this thing bounces here, you should be happy with a 91.25. That's the high odds trade, and then we could stretch this out a little longer and get it up to here. So 9 ticks in favor right now, not bad. Yeah, got right on the high. So here's 97.25, right to the high. That's 3 handles. Tapped it on 2 bars and is pulling back a little bit. So not much of a shakeout leg. That was pretty decent. Pretty nice little push there. Now this LVN is still stout, as is all of these going down, right? So I still believe that if you're going to reject the highs like that, you might come all the way back into the LVN. You might actually push just below it actually, and then they'll try it again. So just keep that in mind. If you haven't taken profits by now, you've got to take some. You've got to, because it has the tendency to rotate, just like we've seen over here. It's not always a perfect higher low, higher low, higher low, higher low. Sometimes it's higher low, higher low, higher low, chop, 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 higher low, chop, chop, chop. And so if it's going to reject a new high like that, at times we'll come right back into it and do it again, right? So again, you have to be risk averse here in this type of market. It's just the counter trend rotations are wiping out a lot of moves. This one goes up, it wipes it out. Goes up, wipes it out. So it's still good. I still think that defending this zone is still the course that bulls are going to take, and they're going to keep doing that until it proves otherwise. And should it fail, usually price goes to the next lowest LVN where they've been defending. So then, bulls that have been defending here, and they defend here, but then it starts to break. Now they hold off until the next one, and now they'll try this one. They got a big LVN right in here. That's going to be the next zone. I don't know if we rotate that low, because this market is not pulling back at all, so I still believe we're headed higher. I don't think we're going to drop all the way to those levels, not now. So I still think we're moving up, and I still think that this is a high priority zone up here. $87.25, nice little spot. And see, yesterday, where we were talking about was, obviously we're always looking for rejections, because most of the time the market is range bound or trading around acceptance, etc. So we're looking for fades most of the time. But when you notice the market is just in one direction and the counter trend rotations are very modest or non-existent, you got to stand off, because now you can drift higher. And when you start to get into a mature trending market, trading doesn't have to be that difficult. It can just be about looking for trigger zones, looking for LVNs to defend, and just buy dips, buy dips, buy dips. But you don't have to buy every dip. You don't have to buy every one. Just look to defend those high probability areas. And this was a high probability zone because of that LVN, because of the structure of the day. It's a good one. It's a good one. But that doesn't mean every single one of these dips is worth buying. It has to be some. I have trouble. I'm not gonna lie. I have trouble sometimes trying to buy every one of these dips, because at a certain point, I'm somebody that I like to buy a significant sell-off. I like to buy a real pullback, and there's no real pullback. So at times you just gotta, bite the bullet, get in, and just hold on. And this is one of those times here where it actually gave us a little bit of a rotation, and now it's everyone's being rewarded on this move. But if you're able to hold on for a couple hours, you might actually see this thing continue higher toward 96s, but it might take all day. And I'm not one to usually sit there in a trade for hours on end if it's only going to yield a few points. I like things quick and fast. I like to trade markets with pace and tempo. And this one's gone 87 now to 92, so that's 5 handles. But it's taken the better part of 40 minutes or so, 30 minutes, which isn't bad. That's good. No adverse excursion. Price never went against that area. So, that's what you want. It's to look for a trade location that gives you minimal adverse excursion. You got to be patient for that zone. And then from there, you know, you look for this thing just to hit your targets. And you got to scale appropriately. Very nice push here. We got to 92.75. 92.75 and rotated back into the trigger zone. So again, we were looking for a move to between 92.25 and 93.25. Now it's 93.5, so this thing keeps moving on us. But, you know, a zone. We look for a zone sometimes, and this is definitely the zone. So we got to push right into 125. Now, why? Why did I choose 125 as our target? Because I always teach that this is our primary target. It says primary right on the label. Right? That's our primary target. But again, even pre-market, you know, I'm talking about reaching the 100 and reaching the 125 because we're coming out of a low volatility environment. Right? We look back at this thing, and what did I mention yesterday and even in the weeks before? We're trading this lower volatility environment right here. But when you start to come out of the lower volatility environment, the only way you get the average 10-day or average daily range to increase over a 10-day basis is to start getting wider ranges, to start trading 20, 25 points per day. And that'll start boosting this average up, up, up. And so you'll start to see this thing turn red. It turns red when it hits 125% because that's an expansion day. And so whenever we're coming out of a low volatility state where the market's just doing this, you know, you start doing it with big days, big days, big days. You get 4 or 5 big days in a row, and now it goes from 14 handles on an average daily range basis to probably 20, right? And it takes a bunch of those days. So instead of playing to 75%, you know that we're about to increase in volatility so we can actually play to the extended target. So that's why I said we may be able to get that extended target today because we are in an increasing volatility state. And here we are. We're not even 2 hours into the day and we've reached it. So we could still have more upside here.